Hello and welcome to the Forex Form Guide. I'm Aussie Dollar Man, and each week we take a look at the major currency pairs through the lens of WD Gann analysis. If you're new to the channel, welcome aboard. It's great to have you here. I've put together a short playlist of videos that I think would be a good place to start. And if you do find some value in this or any of the videos on my channel, I'd really appreciate it if you could like, comment, and subscribe. It does help the channel get pushed out to more people. My intention with this channel is to help people with this stuff and to spread the teachings of WD Gann to those who need them. They've certainly been very helpful to me and many of you, and I'm sure that many others would find value in them as well. In this episode, as always, we'll take a look at the Aussie dollar, US dollar, the pound US dollar, Euro US dollar, and the US dollar Japanese yen. Apologies for last week's episode. I did have a sound glitch there. It appears as though I unplugged my Yeti microphone, so it was just the laptop picking me up. So it did pick me up, but it wasn't as clear, and it obviously wasn't as loud either. So apologies for any inconvenience there. I do have a fairly narrow window to record these. So I literally have a 36-hour window, and it does take me a few hours each weekend. I was doing that very late at night, and I do remember unplugging the microphone, and I just forgot to plug it back in. So apologies for those issues there. A quick disclaimer before we begin. This video is for educational and informational purposes only and should not be considered financial investment or trading advice. Bottom line there, do your own research. Trade responsibly. Let's kick off with the Aussie dollar, US dollar. And for those who are new, I like to look at the currencies using this page here, taken from WD Gann's second book, The Wall Street Stock Selector, page 46. You can see Gann had his charts lined up side by side, yearly, monthly, weekly, and daily. I like to do it slightly differently, as you'll see in a moment, and I have the monthly, weekly, daily, and the 4-hour chart to assess. But it's very important, whatever timeframes that you like to trade, that you consider multiple chart timeframes. It's very hard to get a complete picture, whether you're looking at a daily or a weekly or a 5-minute trade. It's hard to get a clear picture just from one time frame. So with the Australian dollar, US dollar, I did put together a forecast for May 2025. You can find that on the channel, and you can see that it was published on the 30th of April, so it was done in advance. These are the dates. I won't spend too much time on them because we'll have a look at how they came in. But I had 29 April high, 2nd or the 5th of May low, etc., all the way down to the 30th of May high there. Note the cycle or the sequence, high, low, high, low, high, low, high. The forecast dates for this cycle that I'm using, and for many cycles, not all cycles, but many cycles in Tunnel Through the Air, they do run on a high to low sequence. It's not a case of here are 50 dates that I'm watching and any number of them could be highs, any number of them could be lows. No, it goes from a high to a low to a high to a low. And this is how it panned out in May. Obviously, I published the forecast on the 30th of April, so the 29 April high doesn't really count as a forecast. I said in the forecast I was looking for a 2 or 5th of May low. The date that I had was the 4th of May, which was a Sunday, so I was thinking it would be the 5th of May. It came in as a low here on the 2nd of May. Note that it wasn't the extreme low, but that's where the market kicked on from. That's where we had strong pressure going up. I used this term during the week with a couple of you in conversations. With these cycles, don't think of them as it must call an extreme high, then down to an extreme low, then up to an extreme high. What you're really looking at is pressure. This particular cycle, we were looking for high to low pressure or downward pressure between those dates, and then upward pressure during this time here. And that's where it's kicked in there, and the market ran up to the next date, which was the 7 May high, down to the 12 May low. So the first half of the month was really good. I was happy with the forecast. The next top was the 19th of May. That was a little lower top here, which is slightly confusing. When you see that happen, you do start to question, did I miss something? Did I miss a turn? Did I miss an inversion, etc.? But often the reason that it's a lower top here is to do with squaring out. Gann says that every top and bottom can be worked out mathematically and that it can be done in advance. So from the 12th of May, we're heading to a target, and sometimes that target is not very far, particularly in a sideways market like this. And if the target doesn't have very far to go, sometimes the market can reach that price. As you see here, that's the target price. The market reaches it early, and then it's still got time to kill before it gets to the forecast date there to lock on. So you can see these sort of sideways mucking around markets here. From there, the next low was the 23rd of May. I actually got short out of this 19 May low. It started off looking really good, and then it just rallied hard out of there, and I got a break even out of there. Then we had the 21st of May high here, which puts you in a little bit of no man's land, but it's just a slight false break of that top before the market ran down there to that 23rd of May low. So I'm happy with the forecaster here. Obviously, from a trading perspective, earlier in the month was better. I mean, let's be real. It's been a sideways market. This is not good for trading. This is awful for trading, but I still managed to get short within a couple of ticks of that 7 May high and trade it down to that 12th of May low down there. I did have a crack at the 19th and the 21st there. didn't go very far. I said in last week's episode of the Forex Form Guide, I expected the market to move higher on Monday. It did move higher, and then it's turned around, and see, it closed below that 7 May high over there, and then we've been running down the rest of the week there. Again, a little bit like this 19 May high, it's a messy period. This happens in sideways moves. You're going from a high to a low, but the market doesn't have very far to go, and it does tend to get choppy. As traders, all you can do is look for your entry points. I like to look for a small risk on entry, and then if in doubt, you can either close the trade, and if it's a small entry, sometimes you still make a good profit on it, but otherwise you can still get out for a break even and not lose money on the trade. I was expecting a lower top here. After that Monday move, the market's run down. We've put in a bigger run compared to this range over here. So it's looking like an overbalance in price to the downside. I spoke about overbalances in a video called How to Spot a Market Turn on this channel, but that looks like a first run down from a little false break double top here. Markets run down, started to run up. I thought we'd run up Friday night and go a little bit higher. I had orders sitting there on the market to go short there. It just didn't get up there. So we'll see what happens on Monday. But if we go down, that may well be our top. And then I think we'll run down all week. If I've made a mistake on the cycles, and look, Gann was not perfect, and I'm certainly not Gann. I'm always open. I said, well, if I'm wrong, what then? Well, my next date is next weekend. So that's a week away. So if we start running up during the week, there's a pretty good chance we'll run up for the rest of the week. But I think that we're going down, and I expect that we'll run down to the rest of the week, and that could give us a decent sort of a low in the market. So I'll track that as it goes along. But if I'm wrong and the market goes up, it doesn't really bother me. I'll just wait for that next date. And that's what I love about this forecasting method. It's really, really simple. There's just a few set dates each month that you watch. You look at your swing charts and your bar charts around those dates. And if a trade presents itself, great. If not, you get on with life. Anyway, back to the analysis. As I said, I expect that we're going to run down into that low. And we'll have a look this week if we can put in a good low, say on Friday later in the week. We'll see if there's a decent low there. That might be a place then that we see the market pull up. But I can't make that decision just off a daily chart like this. So in a moment, we'll go to the bigger picture charts and we'll have a look at what they are showing. But for those of you interested in this cycle work, the tunnel through the air is where these numbers are coming from. And if you pay attention to the videos that I've put across the channel, I've given you some direct information such as recommended reading to help you on your tunnel through the air journey. And I've also given you some clues in the videos across the channel. So if you haven't subscribed, make sure you subscribe to keep up to date with the videos. And if you have subscribed, check out some of the videos that I've done in the past. And if you want to listen to Tunnel Through the Air, I have put together an audiobook there. You can find that playlist on this channel as well. So looking at the bigger picture charts on the Australian dollar, I've spoken many times now about this April low. It does look pretty strong at this point in time. We've run up there into May, obviously. Today's Sunday, the 1st of June. That's our monthly swing after a failed monthly downswing there. So that looks to me like we're getting ready to put in a decent leg to the upside. This 50% point here, that's crucial. If we get up around there and we get stuck, this thing could come crashing back down and break through 55 cents there. However, if we can burst above that 50% milestone there, it may be that the Aussie dollar is going on to bigger and better things. As a trader, I'm not too worried about more than a week or two ahead. Although for those of you who've been following the channel for a while, you'll know that I've got my eyes both firmly fixed. A little bit like Sauron in The Lord of the Rings, the eye of Aussie Dollar Man is firmly fixed on September of 2025. I think that will be the best month for trading on the Aussie dollar this year. There's something happening around that time that should be a once in many year opportunity for trading. And that has to do with the law of vibration, which Gann talked about in the Ticker Investment Digest article. If you haven't read that, that's on the channel as well in a couple of the playlists. So looking at this monthly upswing, so far we're going up. That monthly swing is made up of smaller moves on the weekly chart. We had a run up there on the weekly chart, a little bit of a pullback out of that 7 May top. Technically, that is a downswing in the weekly chart, and we're now in our second weekly swing up. It looks like it's failed. So this top that we saw here on the daily chart, that's not just a daily top there. That's a very good chance of becoming a weekly top. All it needs to happen for that to be a weekly top is for us to, this week, break the low of last week, which you can see there was Wednesday, Thursday, Friday. These little lows here, if we can break below there, as I said, I think we'll be heading down for the week and maybe more than a week because that's a weekly downswing, but it will also be the beginnings of a monthly downswing if that happens. Again, just be a little bit cautious because we are in a sideways move. So sometimes you will see the market break out. So we had a low there. We just broke through there over here. It didn't kick on. We just broke out to the top here. It didn't kick on, etc. But I think we may see a little bit of a pullback running down there. And look, if we see a pullback on the weekly chart and we start running down, all of a sudden, look, we broke through 50% of this run down here. But if we break below there significantly and then come back up and we get stuck on that 50% point there, well, all of a sudden, that's in great danger of a big fall to the downside as well. A couple of months ago now, as we had this massive move up here, I was starting to get bullish on the Australian dollar for this year. But since then, we've really gone nowhere, and that's not a typical move for a market that's in a bull market. You do normally see some follow through there. Let's just say that I'm watching it with a lot of interest. We'll see what happens this week, though. I'm sure that next weekend we'll have a much clearer picture on where this is heading. If you're interested in learning more of the stuff that I've just been showing you there, that's called form reading and a little bit of price forecasting too. You can learn about those in WD Gann's book, How to Make Profits in Commodities. I learned it first from Safety in the Market's Active Trader program. I was a student of Safety in the Market for many years. Once a student, you're always a student. So technically I can still ask them questions if I have them, which I don't. I was also a teacher there for a period of time as well. If my children decided tomorrow that they were going to start learning to trade, those are the two things that I would start them out on. There's a lot of things with Gann. I'd start them with chapter 2 of How to Make Profits in Commodities, but I'd start with this and learning bar charts, swing charts, and a trading system built around that. That's something that a lot of Gann traders lack. Let's move on now to the British pound US dollar. And you can see the British pound has continued quite strongly. We're now in expanding monthly up range territory. So we've gone above the old top there and we're putting in a stronger range than we saw last time. So it's showing signs of strength to the upside. That's all good. It's still, I mean, if you look at it there for the last couple of years, it's still only just poking its nose above a sideways move. And often, even if a market is going to take off to the upside, when it breaks through old tops, it will still have a pullback and give you a higher top. This swing's been going for a while. At some point, it will pull back. So I am just on guard for that a little bit. Not because I'm in it. I haven't really traded the pound much at all this year, but just because if it pulls back and gives a certain kind of setup, there are 4 kinds of setup that I look for in the market. I'm not going to share them online in a forum like this. If you're a Safety in the Market student, you already know what they are. They'll be in the teachings there at Safety in the Market, but there's 4 things that I look for. But basically the number one thing that I love in a trade is a small risk entry. It's the S in smart trade, a small risk entry. And if this pulls back into maybe a 50% pullback of this run up here, and then a few other things all come together at that point, then it gives you an entry where you can take a trade with a very low risk. And that means you can normally take a larger position and you can move your stops to entry plus commission or break even very, very quickly as that market moves away. And it just builds the base for a really nice campaign there. So I am watching something like this. I'm not as interested in buying the pound personally at the moment because of the fact that its monthly swing is in expanding territory. It's been going up for a while. At some point, it will pull back. But for the first sign of a pullback like that, you're not going to look at the monthly chart. You're going to look at the smaller picture charts. So this monthly swing here, you can see that's how it looks on the weekly chart. That's been going for a while. At the moment, we've got an upswing here on the weekly chart, and it's just paused a little bit and given us a little bit of a signal reversal bar there. We've opened, we've run up, we've closed lower. Not a major signal reversal bar, but a little one there. And you can see it's just potentially setting up for a little first lower top there on the daily chart. If that was the case, you'd be watching to see what kind of a pullback you get here. Often that happens in your larger ranges. You get a couple smaller ranges making that up. It doesn't mean that the whole move is over, but from there, if the next run up is contracting, that's probably the end of the move. That's something that I look for on all time frames. You get a run up and then a smaller run up. And if you get a smaller run up again, so smaller compared to this smaller run up, so let's say this was 100 points and then 80 points and then 60 points, smaller, 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 often that's the end of the move there. So I'd be looking for an opportunity to trade that. On the daily chart down here, you can see we started off quite strongly. We had a higher bottom and then a really good strong run up there and a pullback down here. We just ducked up on Friday and made a higher high there, and we've closed on the low there. So again, if we get a down bar on Monday, that's going to give you a little daily lower top there. And that will probably be the end of that weekly swing there. And then you're looking to see what happens here. How far does this kick on to the downside? Or does that move fail and then turn around and continue to the upside? To me, it is looking, as I said, we're well and truly into expanding range territory there. At some point, it is going to pull back. And even though it looks like the trend is up on the monthly chart, a pullback on the monthly chart is still going to be significant. Because, for example, let's say we pull back to this level here. It doesn't look like much of a pullback, but judging by the top there, that's about a 600-700 point pullback, which is still quite a bit. Now, what's happening here on the daily chart? As I said, it's potentially forming a first lower top there. Let's have a look at this section here on a smaller chart. Let's break it down on the 4-hour chart. See if we ran down 1, maybe 2, 3, probably 3 sections down there, and then it's pulled back and it's gone 1, 2, 3, 4, 5 tops, all on that 50% retracement level there. Okay, 50% of that run down there. So it's a 50% pullback. And then look what the 4-hour chart did. It ran down, gave you a lower top. So that's a first lower top on the 4-hour chart coming off a 50% retracement and potential first lower top on the daily chart. So to me, that looks like it's heading down. So it would just be a case of watching this, but that looks to me like it's going to give us a down day on Monday, confirm that first lower top there, and we'll head south there. Then it's a case of, is it going to stop? Is it going to pull up? This is your weekly chart. That's your daily chart. It's the same thing. Then, as I said, it's a case of, is it going to pull up maybe just a 50%, 62.5% retracement on the weekly chart and then continue up? Or is this our monthly top and are we heading south? As a trader, you don't know until the monthly chart turns down. Often at that point, it's too late. So that's why it's hard. You have to build scenarios and say, well, what would be a sign that this top has come in? Well, this right here could be your first sign, a daily lower top that's going to confirm the end of a weekly, probably, and that's a contracting weekly upswing there, which could mean the end of that monthly swing there. You won't know. So as a trader, you look at this and you say, well, it could be a top, so I'll look for a trade there. How might I trade it? Well, you've got to run down here. It's banging against that 50%. Now you've got a lower top trade on the 4-hour chart, so you could potentially take a short trade there, put your stop above there, let it run down, see what happens. If you're wrong and the market then turns around and goes up, you lose 1 unit of risk. If you're right, if you can get a nice tight entry, you can make 5, 10, 15 to 1 on the trade in most cases, not always. So that's what I see on the pound. Very, very interesting. But like the Aussie, it does look to me like it is heading south this week. Let's check our friend, the Euro. And you can see the Euro has some similarities to the pound chart. We've got a very strong monthly chart here. It's taken out a bunch of tops there. It's still tracking above those tops there. We had a bit of a nothing week there. 1, 2, 3, 4, 5 bars there. We've basically closed just below the open there on the daily chart. On the weekly chart, these 5 bars make up this weekly bar over here, but it's in a bit of a precarious position because if we have a weekly lower top here, that's almost certainly, as I said, going to give us a monthly pullback there. Now, I spoke last week, I said, I like that 50% price point. If the market doesn't go much higher, it went a fraction higher, that 50% level will still stand if we do head down there. So it's one that I'd look for. The question is it going to do that? And what proof do we have that it might do that? The Euro chart's a bit messy at the moment because we've got potentially an overbalance in price here on the daily chart because we have a big expanding range compared to that run down there. And after the overbalance, technically it's an overbalance. It's a tick or two away from 200% of that last run down there. And then this run up here is basically equal to that run up there. So if, as I'm seeing on the pound and the Aussie dollar, if we start heading down next week, well, we could see a bit of a chain reaction there. You've got a lower top then confirmed and an overbalance in price on the daily chart here. And you would have a very good chance of a lower top on the weekly chart, which probably means that this monthly upswing is done. And if that's the case, well, I'd say that 50% milestone at least is where the Euro would be heading. Now, it's a little bit messy. If you look at the 4-hour chart, you've got a run up there, which was actually quite strong. So that big outside reversal bar there coming back up, that looks quite strong. We then ran down, had a little outside bar there, a failed down bar there with a high close, and now it's run up a bit and closed again. So just like we saw on the daily chart, the week sort of didn't go anywhere, although it's told us a lot with the overbalance in price and now the potential retest up here, or an equal range running up there. A good place for that to start to come down from. On the 4-hour chart, look at that 1, 2, 3, 4, 5 bars there. You're basically all in that same spot there in the last 20 hours of trading or so. So this could really go either way on Monday morning when it opens up. In this case, I wouldn't be looking to base a trade on the 4-hour chart because it is a little bit ambiguous. But on the daily chart, if we break Friday's low there, which is this low here on the 4-hour chart, but if we break Friday's low there, it's unambiguous. It is a confirmed lower top on the daily chart. And often that would mean that's the end of the weekly run up here, which is this one here. So that would give us a build into a lower top on the weekly chart, which again is probably going to lead to a down swing in June on the euro on the monthly chart. Now, there's a lot to take in there. Take your time with it. You can have a look at WD Gann's early lessons in the commodities course, or as I mentioned earlier, that safety in the market course really is going to give you all the swing trading background that you will need there. I know many of you are safety in the market students, you know what I'm talking about there, but it is very, very important to know that. You have to look at multiple swing chart timeframes, and the reason is what happens on this chart is going to affect this chart, which is going to affect this chart, which is going to affect this chart. I look at monthly, weekly, and then down here, daily and 4-hour charts. You might look at yearly charts and then a monthly and then a weekly and then a daily. Or you might look at just a 4-hour chart, a 1-hour chart, a 15-minute and a 1-minute chart. But look at them side by side and you'll see how one chart triggers the next chart, which triggers the next chart, which triggers the next chart. At safety in the market, that's referred to as wheels within wheels, as Gann spoke about as well. But it's a crucial concept in trading, and it so often gets overlooked by people who want to just go to tunnel through the air and find the big hidden secrets there, like the sign of the prophet Jonas, which I spoke about in a video on Friday. Finally, we're going to take a quick look at the US dollar Japanese yen. Looking at the US dollar Japanese yen, very little has changed in what we've been looking at on here, but we are setting up for a higher bottom on the weekly chart there. So for those who are new to the channel and might not have seen this before, I like that top on the US dollar Japanese yen. We've run down, we put in a lower top here. So we run up and had a failed run up there on the monthly charts, this little low down here. That gives us a place we can run our trend line down from. Then we've come down into triple bottoms. The third bottom is slightly higher than the second bottom. I don't like that as a setup. If I was looking to go long, I think that's going to be broken. In May, we've opened, we've run up, we've come back down, and we're closing around the low and near last month's close. But if you look at this setup where we are here, and you look at it over here on the weekly chart, we put in a strong move up here. That's an expanding range up there, not quite an overbalance in price. And now we've put in a contracting range down here on the weekly chart, and it's run up there. Not a very good close there. It's closed a bit below the halfway point of the bar, but that has given us a little higher bottom on the weekly chart there. So it wouldn't surprise me to see this go up maybe to 50 or 62.5%, maybe even to 75%. And that may send our monthly chart higher, but I'd be watching this line very, very closely. And for those who understand price forecasting, such as Gann teaches in How to Make Profits in Commodities, or again from that Safety in the Market course, if you understand price forecasting, if you get a price cluster and it's sitting somewhere around this line here, look out, that could be a really good place for a trading opportunity. They're the sorts of things that I look for in trading, and it's really important to understand as traders. You have your scenarios, you have your outlooks, you have in your head a picture of what you think is going to happen, and then you look for trades based on that have a small risk so that you can get in. And once you're in the trade, once it moves in your favor, you can move to break even, and then you take all your risk off the table, and then you just let the market do what it's going to do. And sometimes you're right and you make a lot of money. Sometimes you're wrong, you lose 1 unit of risk, and then you move on to the next trade. But looking at this, that first higher bottom there, that's backed up by what we're potentially seeing here on the daily chart. We've had this big run up here, 75% retracement. Potential higher bottom here. Again, if this goes up on Monday, and this is the US dollar going up and the Japanese yen going down, but if we go up on Monday, you've got a higher bottom there on the daily chart coming out of a weekly higher bottom as well. Could be an interesting place to see a little bit of a rally there on this market. And again, if we break this particular move down on the daily chart, you'll see over here, if we break that down into a 4-hour swing, that's also had a deep retracement to about 62.5%. It's put in a higher bottom there, and it's just sort of hovering between 50 and 62.5% there. If we have an up day on Monday, we'll be taking out that top there, and you'd expect that to run higher from there as well. So in summary, looking at the Aussie, the Euro, the Pound, all look to me as if we're going to head down on them this week. It may not be a strong runaway down move, but I think that they are due for pullbacks to the downside, and the US dollar yen looks like it's due for a raise. Looking at the economic calendar ahead, on Tuesday, you've got manufacturing in the morning. That's midnight Sydney time, so it's technically Monday night. And then Fed Chair Powell speaking Tuesday morning, 3 a.m. That may move the market. You've got Swiss CPI numbers coming out on the afternoon of Tuesday. I don't look at every single announcement. It's more just being aware of them if I'm looking to place an order. For example, Wednesday, the 4th of June, if I was looking to trade around there, which I'm not specifically, but sometimes you get a higher bottom and you can add to your position or something like that, or a lower top you can add to your short positions. But on Wednesday, we've got GDP figures coming out on the Australian dollar. a minute or two before big announcements, you tend to see the volume get sucked out of the FX markets. So that's a time just to be aware of, so you're not placing trades and trying to enter a trade when the spreads widen and it gets harder to get a good small risk entry on your trade. You've got non-farm employment following that up on Wednesday evening. And then Canadian rates are being announced on Wednesday night. They're expecting a 0.25% drop. We just had a 0.25% drop on the Australian dollar rates. Canada's looking like following suit. And then on Thursday night, the Eurozone are looking at dropping their rates by a 0.25% as well. We've got US unemployment claims too, and the ECB press conference. Sometimes the market doesn't do much when the rate is announced, but at the press conference, the market or its participants are just waiting for a particular buzzword or piece of information, and then bang, they'll hit the market up or down. So that could be a time to watch. And then on Friday night, you've got employment data for both Canada and the US as well. Again, if you're new to the channel, I don't put too much emphasis on these dates. I'm not looking to trade these dates. For me personally, it's just being aware of them. My belief, and it was the belief of WD Gann, is that the market is going to do whatever it's going to do, whether the news is good, indifferent, or bad. So I get my information from the charts. There's a lot of information that the market is telling you at all times. And when you look at your turning points in the market, when you look at your market data, your swing chart ranges, your trend of the market is telling you a story at all times. And it's up to us as traders to take note of what the market is actually telling us and to profit from that. A reminder, if you missed it, on Friday night, I released this video, WD Gann, Sign of the Prophet Jonas. I think that's worth your while watching. Of all the things that Gann promises, it was this one, the Sign of the Prophet Jonas, where Gann said, all power under heaven and earth is given to the one who understands this sign. Now, that's a very, very massive statement, especially considering some of the things that Gann could do and some of the forecasts and trading records that he had. So it's something I'd encourage you to watch and have a think about at some point. It was on page 69 of the Tunnel Through the Air that Gann mentioned this quote about the Prophet Jonas. So just a reminder, if you are studying Tunnel Through the Air, make sure your book has 418 pages, because Gann codes things in the book in many different ways. And one way of coding involves the page numbers. So if you have a different number of pages, there are versions out there. I think someone told me they have 226 pages in their version of Tunnel. That's a condensed version, probably a publisher thinking that they're clever, saving half the printing costs there on the paper, but they're ruining the codes there. So make sure that you got the version with 418 pages. Or you can listen to the audiobook on my channel, as I mentioned earlier. That's all for this week's video. Thank you for watching. If you found value, I'd really appreciate it if you could click the like button and leave a comment. It does help me to grow the channel. And if you subscribe to the channel, which doesn't cost you anything, you will get a notification as I release new videos. The main thing that I do put out my once a week Forex form guide videos, but as you can see, from time to time, my creative bug gets into me and I like to release a video midweek. So you may find some weeks that I release 2 videos, not just the one. Thanks for watching the Forex Form Guide. We'll be back again next Sunday, 7 p.m. Sydney time, with more FX analysis and more WD Gann. So until then, all the best with your trading. I hope you have a fantastic week, and bye for now.